All right, everybody, we are back. We are across the pond. The pond filled with all sorts of weird animals. No penguins, unfortunately, but we are back, and it is Saturday, April 22nd, 1 o'clock p.m. How is everybody today? I see Fernando is here. Good afternoon. Happy pumping Wednesday. All right. Happy triple pumping Wednesday to you too. Thomas, hello to the Penguin Club. It's good. It's a good name. I like it. Very good. Very good. Penguin Club. Penguin Club it is. And Mark B. What? Oh, boy. Okay. We're going to leave that one alone. All right, so hopefully everybody is good. I think my other computer just crashed. Anyway, I'll deal with that in a minute. So Bitcoin, yesterday we had a $13 reprieve. Very small $13 cushion over the 50 DMA, but that is really all it takes. The idea essentially is just, the bears came in heavy, right? Came in heavy, for sure. Okay? And the idea was, right, they ripped away the 9, they ripped away the 20, the 21, and the 50, but if you remember going back a few days ago, the goal is always the 50, right? For at least for this segment of time here, because the 50 was so well respected here, and here. That when the Bulls took it over here and they broke over it and they confirmed it, right? The Bears were less than pleased, let's just say. So the idea was, once they broke the 50 here, the 50 DEMA, right? The idea was their target level is the 50 DMA. I mean, after that, obviously the Bears want to bring it down to $1, right? I mean, that's the sole purpose. So, but they have to do it one stage at a time. They can't just say, bring it to 0, everybody. It doesn't work that way. Yeah, the other computer, I think it died. Oh man, this is bad. I can't deal with this. We'll see if we can fix it. Yeah, so obviously they can't just, rip it down to $1, and that all falls on the burden of the Bulls in order to absorb, right, whatever selling pressure they get sent their way. And if they're able to absorb it all, right, then they come out on top, right? Very simple. I'm trying to think of a good, war scene movie where you see all the front lines attacking, right? And, you got your basically hold the line, right? Everybody attacks like this. But you only have one charge, one main charge, and then you'll start to see the thinning of the herd. Thinning, and then this line moves back, and then this line moves back, and then this line moves back. All the while, you keep charging, but you're charging with less and less and less because you're killing a whole bunch off at the same time. Now, depending on who's stronger is who's going to come out on the other side, right? The actual goal, right? So you're here. You got your X's and you got your O's, right? And that's the battle line right here, right? So who's ever leaning heavier onto the side or gets pushed back a little bit, whoever makes their way back and ends up retreating, right? That is obviously the loser. So it's very much the case when it comes to trading. Some people will call it buyers and sellers. Some people will call it supply and demand. Some people call it bulls and bears. I like to mix it up, but for the most part, if you're telling a story, for me, it's the bulls and the bears. Those are the two major camps. Those are who we interact with on a daily basis. That's who you end up being when you're in a trade. If you're short, you're a bear, and if you're long, you're a bull. It's that simple, right? So the way we look at this particular scenario with the moving averages, It's easier if we scroll back a little bit, get like a little bit of a visual representation of what's actually going on here. And we'll have to scale back a little bit further so that we have a little bit more data to kind of play around with. All right, so we'll do something like that. Now, the concept here is very simple. As far as moving averages are concerned, it's a visual representation of where that data point is in relationship to its X amount of history. For example, a 20. Now, everything we're talking about right now, as of this moment, is based on the daily, right? So every moving averages is only based off of its time period that it's allocated on. So if you have a 20 SMA and you're on a 4-hour chart, it's 20 4-hour periods, right? That's it. So anyway, we're on the daily chart, so we're talking daily. So we don't need to re-emphasize that it's a DMA. We'll just talk SMA or S for short, EMA or E or exponential or whatever for short. All right, so when we look at the rise up to the all-time high, we notice what's going on with our moving averages. The fastest ones are the closest to price, where the furthest ones are the slowest or larger moving averages. For example, your lowest one is a 350, or at least on this chart, and your fastest one is actually an EMA, and it's a 9. You can't even see it, it's buried in the mix here, but it's the little black one over here, right in between the price and that thick red one, which is your 20 and 21 SMA EMA. All right. From here, we notice a few things, right? Just take a look at this. The peak, the peak, the peak, the peak, and the peak, right? They each have an area in which they reached their high limit, their extreme high, right? We can call that the climax. That's where they hit the actual highest point, not price, but the moving average all by itself. Okay, it hit its price right there. And at that point, it started to work its way down. Now, the destruction that could cause is when we notice the crossovers or cross unders in this case. And that's where we have something like the 20 is riding the charge and it crosses under the 50. But then it continues to cross under the 100, right? Now, at the point that it's crossing under the 100, we have the 50 crossing under its next in line, right? So if we look at it as like, here's your 20, every one of these will represent its next in line, right? Each one has a relationship with the other. So the 20 has a direct relationship with the 50, right? The 50 has a direct relationship with the 100. The 100 has a direct relationship with the 200, and the 200 has a direct relationship with the 350. Now, if we say the 20 to the 100 doesn't have a direct relationship, it actually has to go through the 50 in order to talk to the 100. So that's, I forget what the terminology I wanted to use, like once removed is basically what I'm saying. So you're not next to it, you're the next runner-up. And that goes even further, a greater distance away when it gets to the 200, and an even greater distance away when it gets to the 350. So if we look at it similar to, by the time the 20 crosses under the 350, it has completed a cycle, right? Does that make sense? We started, right, with everything in order, and now we have the very first piece of the puzzle starting to put everything in this order, right? Into the opposite order, the bearish order. And the bearish order, did we ever complete? We did, yeah. So the bearish order is this: the 350, the 200, the 100, the 50 is tied right in here, pretty tight, and then the 20, and then your 9. So now you're in a full bear mode, where this was a full bull mode. All right. And just as we saw on the bearish side, or, where everything started flipping bearish, right? We're going to see the same thing on the bullish side where things are going to start flipping bullish. Now, because this is a one rise peak and drop, it's a little bit more noticeable here. It's less noticeable here because you do have a rise, right? And then you have another drop, and then you have another rise, and then you break that point. So consider your moving averages very similar to price. Now, can we, I think we can, right? Can we delete this? Borders, wicks, yeah. All right, so at least this way we get rid of price for a second, so we could just take a look at just the moving averages. All right, so as you notice, price comes down, or a moving average comes down, it turns up, it makes a little peak over here, and it pulls back, and doesn't pull as low, right? And then it comes up again, and it sort of breaks that level, and then it starts working its way up again, and again, and again, and again. So very similar to how we would do support resistance when it comes to price. This is actually a lower low, it looks like. Yeah, that's a lower low. So similar to how we would do price, right? We do the same thing with moving averages. Now, I don't want to go into the point where we're saying the 20 found support, right? At the 350. I mean, we can say that, but there's a whole lot more science that needs to go into that. So I don't want to get in there just yet. All right. But the idea is, when these guys are in order, depending on the time that it takes to actually get them in order, gives you some sort of window into the future, gives you some sort of small edge that you could say, okay, well, now that the 20 has actually crossed the 350, now, maybe we got an opportunity here where this is going to be short-lived. Just like this was here, the 20 finally crossed the 350, and it was fairly short-lived. There wasn't a whole lot more to go before we ended up coming back up. Now, in this scenario here, when the 20 crossed the 350, there wasn't a whole hell of a lot more to go before price started working its way back down. Now, when is it safe, right? When is it everything's good? Well, that remains to be seen. You have to have good spread as well. So very much like the MACD, that we talked about last night, how its histogram, that's an awful histogram, but its histogram is essentially just showing you the separation of your MACD and your signal, okay? And as they grow wider and wider and wider apart, your MACD will show, right, that, you have a bar, and then it's getting wider and wider and wider. It's getting larger and larger and larger, and then it'll start to reduce like this, to the point where it actually converges completely, and that's when you have something like that, okay? This is a similar situation where when you have all the crossovers and everything's in order like you do right here, right, you don't have a whole lot of separation, right? There's your separation between the 20 and the 350. Here's your separation between the 1 and the 2. Here's your separation between the 50 and the 100. And here's your separation in between your 20 and your 50. Those are all the direct relationships moving forward like we talked about over here. Okay? So when we talk about crossovers, it's important that you understand why they're relevant. You don't want to just say like, I know we've been talking about the 2050 crossover. I know we talked about the 921. I know we talked about the 920. I know we talked about, the infamous Death Cross and Golden Cross and those things too. But do you really understand it? And that's what I want to make sure you guys have a good fundamental concept of what the moving average is actually doing and why it crosses over and why that means something. And it's kind of whether you use moving averages or not. again, like we spoke about last night, was it's not necessarily that you care, but you do want to know what everybody else is thinking. So if there's a large portion of the trading community that trade Bitcoin and they are, I don't know, let's say 60%. And those 60% use moving averages, not religiously, but they use them on their charts and they trade with them. That's something you're going to want to know. That's something that you're going to want to at least be educated on, to the point where you could be like, hey, you know, that's a 920 crossover, that's a 1020 crossover, that's a 2050 crossover. That's probably going to get some people, you know, into the market. That's probably going to get some new heads in here. And that's the kind of stuff you want to use it for. Now, if you want to use it for trades, I mean, by all means, go ahead. But that's not, I'm not trying to, I don't know what the word is. I'm not trying to convince anybody to do anything when it comes to technical analysis outside of learn, right? Outside of learn. I would like to convince you guys to learn, but I'll never try to convince you guys to use a particular method, whether it's, price action or volume-based breakouts or MACD crossovers or moving averages, nothing like that, right? That's not my aim. My aim is simply to educate you on what I see so that you can see the same thing, right? And if what I see is wrong, right, then I have to make sure that it's correct to the point where we can all learn from it. All right? So, make a long story short, the bears came, right, and they took the 50 yesterday, or 2 days ago, I'm sorry. When you take over a level, we have a period of time called confirmation, and confirmation comes on the next candle, close of the next candle. Never a second earlier, as we saw last night, with the bears coming in the last 20 minutes and driving the price down, 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 down in an effort. But they came up $13 short from the level that they needed. Now, not to say that if the bears were to get that extra $13 and close under the 50, not to say that this candle wouldn't still happen, but there's a reason why some people participated in this candle. So I don't want to say that the candle would not have happened, but I will be fairly confident in saying the candle would not have happened the way that it happened. In other words, it may have only reached maybe just the 20, the 21, right? You have extra traders on board because of something that happened, or in fact, something that didn't happen. And what didn't happen was the confirmation didn't happen. So the bears came down and the bears took back their 50. But when you take back a level, you have to own it. And you have to prove that you own it, meaning that you got to spend the next candle and you got to hold it. And that next candle, you got to hold below that level. And they were unsuccessful in doing that. So it rightfully goes back to its original owner. And believe it or not, the original owner is the bulls, because the bulls got it here. They did successfully hold it above the level, and then they traded 1-2 days above the 50 before losing it, but they only lost it for 1 day, which means this becomes a false break and it goes back to the bulls, right? The bulls don't need to confirm what's already theirs. It's only the bears that need to confirm, right, what they stole. Now, when we talk about these levels here, okay, these are confirmed because the bears broke the 9, the 20, and the 21, okay? And they confirmed holding it as resistance yesterday, meaning that the bulls were unable to trade above it. So now these levels are owned by the bears, and it's up to the bulls to now take those back. So if the bulls do, let's say the day was over and this is the daily candle close, resistance at the 50 DMA, break and close above the 9, the 21, and the 20, it's up to the bulls now to confirm that with another candle above those levels. It's not a give me. It's not a gimme. Okay? Anyway, so that's where we're at as far as moving averages. The 50 is concerned. The 50 DEMA holding resistance again. All right, and we'll pop over that 4-hour real quick where you can see this this little wedge over here. So the rising wedge, I actually like it a lot. It's cheating a little in the way that we're eliminating price action here, and we're eliminating like all of that price action there. So it, like right off the bat, it's low quality, right? Low quality. Because it's been completely violated. Okay? It's just been abused left, right, and center. However, the meat and potatoes is holding up really well. And there's something that should be, denoted, or something that should be regarded as a potential, right? If it holds up really well. So if you have something that has like really, really, really good action, it has really good respect from a floor to ceiling support resistance point of view, and you got a couple outliers, sometimes you just let the outliers lie and you just focus on the center line action, which is all this stuff right here inside the black shade. All right. And that's kind of what this rising wedge is. It's a low quality, completely violated rising wedge. However, it's very well respected upon its floor and upon its ceiling. Where if price were to do what it's doing here and get over that 350, right, we could not only say we got a potential shot of resistance on the Simtry, but another potential shot of resistance at the wedge, right? And I would be confident in looking for a reaction at either one of these levels. All right, now, if the 350 is to knock it down, like the 350 knocked it down here, then I would be fairly confident in a reaction at some point on this line, and that reaction might intercept anything that would have came down here. Does that make sense? So you're looking for areas of opportunity where you're going to get a reaction, especially a reaction that's going to intercept a known level. And the known level would be the Simtry. Okay? Beyond that would be the 200 on the 4-hour chart. All right, 400. Look at the difference between the 200 SMA and the 200 EMA on the 4-hour chart, right? They're worlds apart. Okay, very good. Let's say hello to everybody now that we got the little introduction out of the way. Let's see, Robbie. Hey, guys, very good. Jayo, I think I might have said that right. Maybe. I'm going to call you DeMarkey because that's a lot easier. You have a question? Hand is raised. Yep. Go ahead. B. Thomas, link USDT on the 4-hour, please. Hello, CX. There you go. Next time, reverse the two. Mark B, why would they want to bring it to $1 though? Just the overall concept of bulls and bears, right? Bears will fight to the death to get it to zero, and this particular asset can't go to zero. And the bulls will fight to the death to get it to infinity. That's just how it is. Yeah, I mean, there's no logic behind it except the bears only, let's put it this way. The bears only make money when the price is going down, and the extreme down move would be down to $1. And the bulls make money when the price is going up, and the extreme amount of going up is infinity. All right, let's see. Fernando, how would you analyze yesterday's candle? That is not a reversal candle in terms of percentages of wicks. No, it's not a reversal at all. It's a doji. I put that in the morning update. This is a neutral candle. It's a neutral candle. All right, there's nothing. There's nothing to look at here. What is nice is this pattern that's playing out. It's a 3 candlestick pattern. Okay. Very nice. Okay. Now, this is where we get into a crux over here. Doji spinning. Okay, I'm just not going to write it up. If I ever get one of those little pen things, maybe I'll write it out. Doji or spinning top, right? We got to get into that argument real quick, and everyone's going to look at that a little bit differently. So the way we look at dojis, or the way I look at dojis, I like to give it a number, and my number is basically 1%. If the body is less than 1%, then I will concentrate on potentially having a doji. If it is more than 1%, then I'm way less hesitant to consider it a doji. Now, a spinning top, by definition, is a short body. Like that would be a short body. That is not a spinning top. We're just looking at bodies. That's a short body. That's a short body. That's a short body. Short body. Right? Those are short bodies. That could even potentially be considered a short body. That's a short body. All right? Then when we get into dojis are supposed to be flat, meaning the open is the close. Open is close is open, as Feinstein is Einhart. Is it E? Yeah. Or maybe I? Okay. So if you understand that reference, tell me. All right. So the idea with dojis build out certain patterns, and spinning tops generally don't. So, a spinning top is generally just a spinning top, and will basically always just be a spinning top. Whereas a doji can be a long leg doji, it could be a rickshaw man. You could have an abandoned baby. You can have a morning star. You can have an evening star. You can have a lot of cool patterns with dojis, and spinning tops, well, spinning tops, you just don't get anything. This is, or can potentially be, an abandoned baby. It's called it would essentially be a bullish abandoned baby, and the idea is that you got a strong move to the downside, right? And then you're left with a doji of indecision, and then a strong move to the upside, basically negating the downward move. And the idea with that is that the Bears used everything they had on the downward move. They were unable to capitalize, and because they weren't able to capitalize, they were tired and exhausted, and the Bulls just went ahead and took it all back. So this becomes a bullish 3 candlestick pattern. Now, I know we've talked about them in the past, so I only bring it up again because, we're in the making of it. I hate talking about candlestick patterns before the candle closes, and we have another 6 hours and 30 minutes, and this candle can very much look like that candle by the end of the day. Okay? All it has to do is sell off, and then you're left with a big giant wick, small body, small push to the downside. All right? Remember that this candle at one point in the day was loaded. That was one big, huge Marabuzzo candle, just like that guy right there. Okay? At one point in the day, it looked like that. And then it sold and sold and sold and sold and sold and sold and sold, and then it closed. Okay? Look at this guy. And it has a downward move as well. Okay? So there's a lot of time left on the clock. And I hate to be the one who's like, well, anything can happen, but like for real, anything could happen. That's the market we trade. We could go up an additional $2,000 from here. We could go down $4,000 from here. All in the matter of 6.5 hours. That's not even an issue. Okay, we've seen those moves before. So I don't want to like, this is an abandoned baby. It's not. If it closes like it does right now, then yes. And then we look for, a bullish move tomorrow, right? So as far as yesterday's candle, though, yesterday's candle is in some eyes, it's going to be a spinning top, which is a neutral candle. It has no bullish bias, no bearish bias. And in some regards, it'll be a doji or a long leg doji because doji should be more like, a true doji should be like a plus sign. It should be like that. Should have very small upper and lower wicks. They should be equidistant to the centerline body, right? And the body itself, the open should be the close and the close should be the open. Within reason. And that's where my little 1% rule comes in is, we're trading at $7,000, right? 1% is like, come on. We're not going to let 1% fly. So, this candle is sitting at a 0.23%. It moved $15 from open to close on an asset that at the time was trading at 6,837. 6,837 to 15, obviously we already know the number, but it's 0.23%. It's so minimal, it's so minute that I would be okay calling this a doji. Now, it's not a doji by definition by the plus sign doji. It's more of a long leg doji to the high side, which is okay as well. Both of those are still neutral. It's still a neutral candle. It doesn't tell you bullish and it doesn't tell you bearish, right? It's just neutral. It just means that there's equilibrium. I'm not spelling that one either. There's equilibrium in the market. What does equilibrium mean? It means that the buyers and the sellers, or the bulls and the bears, agree on the price. Okay? When we talk about this, who knows what that is? I'll leave that up there. Somebody tell me what that is. I know somebody knows. All right, let's see what they bring to the dollar. To Stoke. How is possible that one guy suppressed the BTC price yesterday? There was one single order pushing down without being filled. Robbie says it was Joe. So for those who don't know Joe 007 is a Finex whale. He's been trading apparently for a while and been sort of sharing his account. Not his account, but the Finex whales it's basically public knowledge. So much like BitMEX has a leaderboard, you could see where like the top, traders or the top positions are at. And it's good. It's good to know sort of where those guys are, right? It's sort of like, hanging out with them on the weekend saying like, what do you see on this price? It's good to know where their head's at because they're moving around millions of dollars. When last I looked, Joe was down, I think, $4 million, $5 million, and he's probably not sweating it at all. I don't think he's had a negative month yet, and that's P&L, that's unrealized P&L monthly. So I believe he's short at the moment, but you would actually have to watch. You just got to see like if Bitcoin has a move up or down, like is his P&L going up or down, and then you'll be able to tell if he's long or short. I believe he's short at the moment, but he could also be hedging as well, right? I believe he says something along the lines of like he's never net short, so there is a chance that that's his hedge. And he actually has a monster long open. But regardless, how can one person hold the whole price down? Again, it's the market we trade in. I don't agree with it. and I don't like it. But, we trade amongst bots, lots of bots, and heavy algorithms and massive makers. Makers that hold positions in both directions in the market, looking to just get paid on market orders. Basically, they're just getting paid fees, right? Or rebates, I should say. So for them, they'll hold positions both ways, and as long as people buy into their positions, then they're good. They just assume somebody's going to market into them, and then they get a rebate for making the market. The idea that one person on one exchange can bottle up the whole price is a little ridiculous. But again, it's the market that we trade in. Everything is so heavily arbitraged, so heavily correlated from one exchange to the other, that on one exchange, right, you can't have too much of a difference without the arbitrage bots buying and selling off one exchange to the other to make up those differences. And that essentially means like an arbitrage bot would have an account at like every major exchange. And although you don't see the reaction right away, as a whole, you get a better deal, if that makes sense. You're not taking like one physical or digital Bitcoin and moving it from one exchange to another, because you'd never be able to arbitrage that way. It's just too freaking slow. So what you do is you have positions on every exchange. And if you buy on one exchange, you sell on another exchange, and you more or less your entire account, all exchanges combined, you've realized some P&L, right? You've realized some arbitrage by selling higher on one account, holding on another account, and buying on another account. So, man, let's just say like you came in off the sidelines and you bought whatever, like $200,000 worth of Bitcoin on Coinbase, let's just say. And the price was 7,100 even, right? And then in your other account, let's say in your Finex account, it's sitting at 7,130, right? So whatever you have on there, let's say you already have over 200,000 on there, you sell it, right? And then you could work everything else out later. You can move that money around or move the Bitcoin around as needed, as the transactions will take a long time, right? You can move that in the background in the distance. You just made the move. You made the arbitrage. You bought low, you sold high, right? Yes, you still hold that position on Coinbase, but that'll be the position that you hold the next time the arbitrage goes the other way and you need to sell off of Coinbase. I mean, it's a simple concept, but it's very confusing when you talk Bitcoin with it because Bitcoin's so slow. If it was moving around Tron, from exchange to exchange, or Doge from exchange to exchange, which is like hyper quick, right? Then that would actually make sense because you're like, all right, well, I can withdraw it over here, put it over here, and then sell it, and then bang, I'm done, I'm good, and you just profited the money. It's not like that with Bitcoin, all right? So for one person to hold the price down, it's just a matter of fear, right? You put a massive, massive, massive wall up that no buyers will absorb, right? No buyers will buy those levels, and so therefore it'll never get filled. So it's like going down the hill in your skis and somebody putting up like a giant poster of a tree. You know what I mean? And you're like, shit. Now you don't know if it's real or not. You don't know if it's a mirage or not. You don't know if it's really a tree and that thing's gonna knock you out. So you just stop. You just pump the brakes and you just stop and you turn and you get the hell out of the way. That's kind of like what a big giant wall on BitMEX or Binance or Finex or Stamp. That's what like that wall looks like to buyers. They're like, buy, buy, buy. And they're like, wow, I don't want to buy resistance. Like, I don't want to put the supercharger on while I'm halfway down the hill and I got this big giant tree in front of me. Now, whether that tree is real or not, nobody knows until it's tested. And when it's tested, and if people start buying it and that wall starts disappearing, well, then price is going to skyrocket because that wall was a joke, right? That wall was a bluff. He didn't really want to sell those levels, but he was trying to keep price down so that maybe he could get better long entries. Okay? Anyway, let's see. Joe G Logo says hello, everybody, and B Thomas. Well, excuse me, Nevin. Why on earth would you ruin the day with your retracted message? Oh my god! All right, well, we're obviously going to blame Joel for that. Abandoned baby. Who the hell comes up with these sorts of names? Does anybody know what FMV stands for? I'm highly upset if nobody knows. Does really nobody know? Well, I guess we'll come back to that. I'm not telling you. If you don't know, I'm not telling you. I'll tell you later. But I want someone. I know somebody knows. Somebody has to know. All right. So anyway, link like normal. Link like normal. Every day with link. 4-hour chart. I swear it's like you guys would be invested in Link or something. In which the case would be you wouldn't need to look at the chart every day. All right, so Link. Let's see. Link finally creeping back up over this level, so that's good. Try to get the bigger picture here to have a better idea on what's shaking. So good push play came out of that. So that was our 15-minute pattern. Yeah. So we had that nice pattern yesterday start to develop. Didn't quite hold the bottom side so well. At that point, like you could cut. Now we talk about on the daily chart about like cutting some of these levels. Like on these lower time frame charts, you could cut all the levels, right? Because lower time, it's all noise. Let's be real. A majority of this action is garbage. It's garbage action. So not so much on the daily. But then you could do something like that, right? And then it makes a little bit more sense. Blah, 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 blah. You got 1, 2, 3, 4 points. You came up 5th point, so you'd add a 4-point reversal play. Push up, which is real nice. Let's get the actual levels over here. So the low side here, high side here. Drop this guy on the breakout. So, yeah, hit target. Yeah, just barely hit target. Look how perfect that was. Right there. Okay. So, target hit. And then, let's see. Assess the 15-minute chart. It's losing the 7 and the 20 right now. Expect to move to the 50 if we're looking at the 15. Let's go back to the 4. 4-hour chart is showing a push to the high side, right? Hit the level. Level came down. Starting to pull back. Potential move over here would be the 7, which is 359, which I believe was the same thing on the 15 for the 50, so that's good. We can get rid of this level here. That's kind of like an intra level. We don't need that anymore. This level we could change to something a little bit more appropriate, something like that in case we do come back, fall back on it. Consensus distributed. And get rid of this because target was already hit. So you're still looking at 1, 2, 3. So you're still looking at, now this candle's not closed yet. You got 2 hours to go. So if we continue with the uptrend, then we'll be looking at 2 different areas here of potential resistance. One coming from the very short swing fail right here, and the other one coming from the much larger one back here. More of a daily thing, but that's okay. All right, so we're looking at that level right there. Right, as a potential. I'll make that one red so it's a little, you can tell the difference between the two. And then the local one is black. So 2 different areas to look at here, 2 different ways to approach it. If you are to break through them, obviously 384 is the next level. And then from there, we're trying to work our way back up. I guess this is a weekly level here, 447. So we'd be looking for that, and up to the 886 would be 458. Then we can start talking about getting back to the 11127 on the daily chart. Now, what do we got here as far as anything important? Let me scale this guy back. That makes a little bit more sense there. Let's see. Volume breakout 4 hour was the prior candle, so that's good. You do have the 4 hour crossover over here. Something to consider, though, is this there. Okay. So you're getting weaker, MACD, getting weaker and weaker over your bullish line, over your center line. You are crossing center line, so you're entering bear market territory. So if you are able to hold that back, you might have one more move. If not, this might be ready to call it a day. That's the high there. Low side holding double bottom. Push for double bottom. This is getting weaker, okay? So you have divergence over here where your highs don't match, right? You got a high right here. You got a high right here. These highs on price are higher. These highs on RSI are lower. All right, and that in turn gives you divergence, and in this case, bearish. Right? So when you have bearish divergence, your price is apparently making a higher high. But at the same time, whatever you're using, it doesn't have to be RSI, but whatever you're using is making a lower high. So this is something to really pay attention to. These do tend to play out. And in which case you're looking for further downside. Now you could argue that it already played out in that little hump right there, which is possible. And that's one issue when it comes to divergences. You don't know which area actually plays out, but that is certainly a close. That's a close. And then price went down. So we can call that done for now. And then we could call this move to the upside, this double bottom. Okay. So few things to look at there as far as that's concerned. You could dial it back in even lower and take a look at these little guys here and take a look at these little guys here and see if they line up. And then, that and this, right, may still have the crossover going north, but, remember, like this center line, and I try to explain this in the morning update because I feel like a lot of people don't really understand this. This center line, right? That's like bullish, bearish. That's just how that works. Regardless of what's going on here. So take the histogram off completely because you don't necessarily need it. And that's good. Right? So this is what you're looking at. So when MACD does that, it's entering bear market territory. That's what it's telling you. When it does this, it's entering bull market territory. Okay? Again, bear, bull, bear, bull. And this is the reason why the MACD is not that great. All of those false signals that are happening. Now, these might have all been good trades. I don't know for sure. But, the idea that it's that choppy, right? We're only on a 4-hour chart is not that good to see. But you can use this just as you would price. You could draw all over this thing. You got a low, you got a low, you got a low, just draw all over. It's fine, right? You got this, you got this, you got this. So what do you got? You got a head and shoulders. Look for that MACD to come all the way down here. What does that mean, right? How does that transpose to Link? I don't know, maybe we'll see Link back at $1. Something like that. All right. But you can gauge it with moves like that and moves like that. You can gauge that, but that's for all intents and purposes, right? That's head and shoulder. That can play out on a MACD. And if it does, then you'd be looking at low side down here on MACD. And then you got to say well, what did price do last time when it was in that particular area? What kind of move are we looking at? So for Link, using that, that's not looking great. For RSI on Link, again, you have two lower highs. So this right here is absolutely bearish divergence. But, did the divergence already play out? That's the problem with doing divergence this way, right? Is that did it already play out? Well, there's no real way to know. Price definitely reacted and definitely came down. So one would be inclined to say, yeah, it probably played out. But what else do we have on here? Well, we got a low side here. We got a low side there. So draw it out. What do we got? We got support right here, held. We got a double bottom over here that held, right? So that gives you, well, it's not really a double bottom, but it was close enough. All right, so that held for a while, so that's good, and you got a little price reaction to the high side. Now you have this internal zone over here, which is essentially something like that. So we'll take that, we'll kind of clean that up a little bit, something like that. There you go. So now you're looking for basically RSI to get out of this range or out of this zone. But what else do we have? We got a swing fail, don't we? Sure do. Why? Because you got this and you got this. What does that mean? Well, look at the 70. Look at the shaded area. Okay? So when you breach 70 and then you pull back through, right, back into your normal meat and potatoes, and then you come back and you breach 70 again, that has to be higher. It has to go higher. If it doesn't, then it's considered a swing fail to the downside. And what do we do with swing fails? Well, we draw it out like this, and basically it's shorts until we cross it. Okay? So with that, you could play the swing fail two different ways when it comes to RSI, and this is irregardless to price. This is like whatever's going on up there, nobody cares. Right? You're looking at that. You're looking at this pattern right here, and that's it. All right? So to play the swing fail on RSI, once price crosses back, that's the aggressive entry, okay? Short, all right? It's also the aggressive exit if you're long, okay? If you're long, that's when you get out. The second it crosses. The conservative move is to look for the pullback of where the first crossover was. So this is your crossover here, and then you pulled back into the meat. From the meat, where's your low before you cycled back and tried it again? And believe it or not, your low is down here. Right? Your low is all the way down here, which means the conservative trader is still waiting to take his short. Because technically speaking, he's not supposed to go short until you invalidate the pullback that brought you the new high that was the failure to the original high. All right? So he's sitting here waiting and waiting and waiting and waiting. And when RSI crosses this line, he's going to go short. Okay? Now, unless, of course, he sees something else on the chart that's like, I got to get the hell out of here, which, maybe he did, maybe he didn't. All right? So for those reasons, not looking super good for Link, not in the interim. Now we can sort of see what we have pattern-wise here, because we might have a cipher brewing. Let's see what we got here. So we take our high, our low, and then our next high. That's on our extension high. It's a 1-2. And then our pullback is a 4-2. That's going to be a little light. That's going to be a little light. And then up here, we'd be looking at creeping in pretty high. Probably not a 3-6-1-8, but yeah. I'll have to come back to that. It could be a couple oddball things floating in and up here. But on the bigger scale, so on the daily, all we have right now is a test, right, above that level. Okay? We're only just barely getting the 7 back. Still got 6 hours on the clock. Still lower than our previous high. So waiting for that to play out. So on the 4 hour, you might be like, yeah, but we've been well over this level for a while now. Like, well, whoop-de-doo, not really. Not on the daily. You didn't even close the candle yet. Right? So there's not anything going on the daily just yet outside of a pullback and a good push. Right? That's still a good push, right? So it's almost a 5% move. Still a good push. Looking for that good push to hold, though. That's the difference. Looking for the good push to hold. You are above this first trend over here, the lower trend, which is great. That's the swing fail. So that's the push up. drop back down, resistance, break it, come right up to the next level on the daily, find resistance, push back up, hold that lower level, and now you're looking to just close that candle above the 7 and above 348 in order to look for continuation on the daily. Cool? All right, very good. Let's see. I'm not invested in it, just want to make some scratch. Fernando, don't be racist to Link. You check BTC every day. Listen, I trade Link often, so I get it. It's fine. Let's see. I believe names came from Japan trading ages ago. BWS before Wall Street? I'm confused. Shit, going racist. Come on. I'm a fan of shitcoins as well. I like Link. I've openly said that in the past. I like Link. I've been trading it from, well before freaking Coinbase had it, obviously. Why do we have the Coinbase chart on? Oh, I needed a clean example yesterday. Right. Yeah, there we go. So again, no change, right? You're just hovering over that level for now. Yeah, I was trading Link here. Somewhere after that big move. All right. Somewhere in that big move, and then, this was all chop. Link was super new, didn't have any freaking history on it. It was like a Joe L chart. It was like one candle. And it, it was making some moves, making some big moves, but it was also dumping fairly hard. I mean, this over here was an 11% move down, followed by a 16% move up. So it was wildly crappy to trade in the beginning, unless you got, fairly lucky. But then when we started breaking these levels here, Link got real interesting once we broke that level. And then Link was really kind of off to the race. Had a real nice pullback here, which was like, it was on the money, perfect. And then a huge move to the high side. Like, yeah, Link's good. Link's been trading kind of like garbage lately. Let's be honest. If we look at the chart, right, this is like kind of crap. This was all crappy in here. The whole thing was just a big wasted rally. Had a very nice W, which was great. And then this was all chop, headed down. Kept on giving you like a false signal of hope up with the 9 and then the 100. But in the end, it all got batted down. And then finally over here, you started working your way up. You had a nice move. But then you had a big giant M pattern. M pattern completely broke down, just like everything did in the market. But that was also one of the few times we had really good volume since our first push, right? And that was it. And that was on the sell, not on the rise, right? So from there, like this whole zone from here, and here, that whole zone was just kind of crappy. If you look at the actual arc of it, right? Like the way this is like sloped, it's not good. It's not good. So you have like that move there, right? So the trajectory is like linked to, a Satoshi. But I do like Link. I like what they're doing. I like the actual project. I don't know too much about the team. I don't know anything about the team personally. But I don't know too much about the team like through research and stuff like that. But they seem to be promising as far as projects are concerned. Anybody can exit scam at any time. So if Link wants to leave, today, then they leave today. If the developers want to dump, then they dump. And that's it. There's really nothing you can do about it. So any moves that you make, you just got to protect yourself in some way, shape, or form. All right, let's see. Ray Ramsey, cool, thanks, very good. CX, your teaching style is reminiscent of Professor Turgeson in the film Back to School. What? Well, as long as it's not, what's that dude's name from the Dry Eyes commercial from Ferris Bueller's Day Off? Anyone? voodoo economics? No, nobody recalls it, huh? Might just be too old for some of you guys. Did anybody get FMV? Anybody? Really? Nobody? Fernando, yeah, link $1.25 mil buy orders for sure. Thanks for reviewing. Link for me. Yeah, B. Thomas, no problem. No problem at all. Yeah, link, like, so I'll never forget, and it's somewhere on my Twitter history, but I'm not on Twitter often. We were over here. This is this was pretty funny actually. So we were just rounding out like these weeks over here, right? So we just finished this up. We didn't hit $4 yet, so we must have been creeping in. It had to be over here because this is when like all these people that just came out of freaking nowhere, and they were just like linked to like a gazillion. And there was a thread with link to 10 and link to 50 and link 1,000 by April. I mean, it's just like ludicrous. Mindless, basically like entertainment, like mindless satire. But anyway, I remember I mentioned something, or I commented something, or I put a chart up, and I was like, yeah, I'd like to see link back at between 150 and 190, ideally in this little ballpark over here, right? Just basically off of this move, right? I was looking at, potential pullback plays, probably this red line here at 147, like in that zone. And this dude went on this tangent about how I didn't know anything and I was the stupidest person in the world, and that'll never happen, and you don't know what the hell you're talking about, and you need to go kill yourself. I don't know. It was just like, it wasn't that dramatic. But it was like this link army just like destroying me. And I'm like, I don't even know why I share charts with you people. Like, I just don't get it. You guys are all just nasty bastards. And I didn't go back and check on our fair feathered friend when we did pull back into those zones. I don't do that. I'm not like the hey, I told you so kind of guy. Like, yeah, I just kind of look at the chart and we look at the chart together, that type of thing. But I've never been a fan of the call out, like, I told you this and I told you that. Like, it's all right. If you did, maybe they remember, maybe they don't. So I don't know what happened to that guy. But he was adamant. I mean, adamant that we were never, ever, 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 ever going to see Link under $4. Boy, was he wrong. That literally lasted a day, right? Because how long were we over for? Let's take a look real quick. So 4 is right here. Okay. So we were over. Oh, well, let's see. Is that close? No, 399.14. So no winner over here. So for 2 days, literally for 2 days, we were at or over 4. And I mean that's it. But it reminds me of, the fundamental mindset and the technical mindset, where I have no problem at all looking at this chart, throwing up this low level here, throwing up that high level there, and even with very little history, I could feel fairly confident that we'll see $2, right? Fairly confident that this is a massive move. Fairly confident we'll see $2. Okay? Now, the original move was this down here. So that was the low. That was the high. And this is sort of how you have to gauge how the people trading this asset are trading, right? And they came right here to the 618. right? So the idea here is they respected price action to the 618, which means they respected the fib levels. So when price shot up from there, I'm looking for, 618. Let's get back to the pullback. But I'm a structure trader, right? So I like this right here because that is structure, right? And so structure for me means we should be seeing 147 to 150 in that ballpark, right? And we did right here. On this day, price dropped to 146.12. Okay? But we hit 4, and the FA guys wanted to end my life. That's a gun, by the way, so whatever. Right? And the technical guys are like, all right, well, that's a 618 move over here. Let's see, we got another big move over here. So 618 brings down to 2. Structural highs will bring down to 147. Somewhere in between 147 and 2 looks good. Let's kind of see what kind of confluent factors we have in that zone. Oh, okay, the 200 EMA just showed up, right? That could be an area we could be looking for, like that. It's just a different mindset where the FA guys, they're like hype. Like, I think most FA guys aren't FA guys. They buy a whole bunch of something because somebody shilled it to them, and now they're stuck in it. And then they, cry or try to convince other people that it's amazing. So they just resell the same shit that somebody served them, and they got duped on it. So they just try to resell it to everybody else so that they buy into it. Now, I like Link personally, right? And that has nothing to do with SP or SP's thought on Link. That's just a me thing. I like Link as a project. So for me, I don't mind taking positions, unleveraged positions, long on Link, especially at levels that are detrimental to most people. Like, I'll buy Link here. So if this thing tanks, right, let's just look at it in this viewpoint. Just as an actual, like, if this thing were to, tank, then I would buy 217, right? I'd buy 217 all day long. Unleveraged, spot long. Why? Because even if it does drop, that's likely not a trade I'm going to get out of, right? Unless we really invalidate something. But I'll add at 136, right? I'll add back over here, back on the downside move at 84. I'll add again at 88. Okay? I have no problem with that. Why? Because that's a spot long for a longer trade. That turns into almost like investment status. Well, it would be investment status, right? Because you'd be holding it for longer than 6 months. So I don't mind taking those risks on something like this. I do mind taking those risks on something that like XRP. We're it might be super popular and it might have a ton of circulating supply and a lot of liquidity. I don't feel comfortable holding it. I don't feel comfortable having a bag of XRP, whether that bag is $10 or whether that bag is $10 million. I'm just not comfortable with XRP, right? So I wouldn't do it personally. All right, if I'm in a long-term trade with XRP, I would have to be heavily monitoring that thing and constantly taking profits out and constantly raising stops up, because that's just not something I want to be hanging out in for a long time. All right, does that make sense? I don't even know why we're talking about this. So we'll probably blame that on Joe. Well, let's just go ahead and blame it on Joe. Why not? that. All right, very good. Let's see. Thanks for reviewing the link. You're very welcome. What's your opinion on Monero as a project? I'm one of the few that do like Monero as well. I do like Monero. I do like privacy coins as a whole. I'm a fan of Pivx. I'm a fan of what they've done. Now, Monero is one of the few that have been around for a while. They sort of been in the background for a lot of people without ever really coming out to the forefront, which I think is good, right? Privacy coins have a challenge when it comes to... So, when it comes to the cryptographic space, or when it comes to our market, let's just say, forget about the cryptographic space. When it comes to our market, when it comes to cryptocurrency, privacy coins have a unique challenge. They are exactly what everybody should want, but for crypto to grow into a larger space, for crypto to grow into a global push, then it'll likely be regulated to an extent, and that regulation would likely take away a majority of what makes crypto great, and that is its privacy, which in turn uniquely affect privacy coins in the worst way, essentially making privacy coins illegal. They'll be branded as, only terrorists and villains and whatever. The worst people in the world, they'll brand them as pedophiles and rapists and murderers and drug peddlers. And those would be the only ones using the privacy coins, which would instantly bring a unique likeness to them for the whole like bad boy rebel attitude, like screw you government, like you don't like this, that means I love it. Same thing when your mom, when you were younger, was like, don't touch. And then, you got a chair up on the counter stealing the cookies that she told you not to touch. So it's just the same mindset. Don't. Okay, that means I'm going to do. However, that niche is going to be small, right? And if they drive it home even further, where linked accounts, so let's say you have a Coinbase account and that Coinbase account has ties to another account through address searches that eventually links back to like a Monero exchange or any exchange that carries Monero, or any transfer from a sale of Monero to Bitcoin to your wallet and vice versa, could then locking you up or shutting down your accounts or whatever the case may be. So they have a very unique challenge. So it's hard for me to like them long term with that potential coming down the road. But for what they do right now and for what they can do, I do like that project. Does that help? All right. Let's see. Tell the truth. You will invest long term in Pundi. Listen, Pundi. So look here. Here's my take on Pundi, and this is what's wrong. This is one thing that is very, 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 very wrong with this market. All right, Pundi is a real project with physical items. They actually have a payment system in physical stores where people can physically touch it and physically use it. And it's worthless. It is worthless. It is the cheapest freaking asset in like all of crypto. And it makes no sense. It's in the 1% of projects that's legitimately real, has an actual use case, and it works. And everybody hates it. It's like, it doesn't make any sense. It doesn't make any sense. And then you have absolute shit, pure garbage, 100% Ponzi scheme bullshit, throwing in 100, 200, 300%, and then, dumping all over their people like a year or two later. But that's not the point. The point is, like, Pundy's actually legitimate. It's like one of the few, very few, I would say less than 1% of the 5,000 to 6,000 projects that are out there that is actually real, and it's worthless. It is nobody cares. Nobody cares. And that's just a massive problem with this market. I mean, if I really if I really thought about it, if I were gonna put like an investment portfolio with from a scale of like smart investor to like total degen, Pundy for sure would be on there, probably at a 10% hold from the total capital. I'm just saying. But no, I don't have any Pundy. I feel like I want some. It doesn't get any cheaper. How much is Pundy these days? Is it still one set? Let's see. Oh, Pundy. NPXS. So they got rid of the tether pair, right? Pretty sure. But we can see the dollar equivalent on Trex, I guess. Let's see. Pundy. So the dollar equivalent is 0.0011. It's far too many zeros for me to care about. NPXS. Let's see what the Bitcoin pair is. Do they take it off Binance too? You can't even trade it. So you got to go to Bittrex. Oh, 2 sets. 2 sets, everybody. Look at that. So now you want to be a complete degenerate, right? But the problem is the order books are so stacked. The order books are just so stacked. You'll just never get your order entry. This guy who bought at 1 and sold at 2, he probably sat in that book for 6 months before it was like his turn. And obviously, 100% move. Right? So you put orders in now, right, to buy at 1. It's probably so stacked, right? And there's so few people selling at 2, right, that you'll be sitting in there for, like a year. Now, if you front run everybody else, you're like, well, I'll buy it at 2. And that's what happens. That's how you get those surges like that, right? And then everything reverses and it goes back to normal and it goes right back down to 1, back 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 to 1, right? Like this volume is a joke. But this, so here's the ray of hope, right? Here's all these guys starting the vortex, right? So if we applied like Gann, which we're not going to do, but if we did, we might be able to get a sense for when these things might do something. So let's say, we're going to say it now. We're going to say it on stream. We're going to do this. I'm looking at, let's say November 15th, 2020. Pundy will be over, let's see, what's that, 3? Pundy will be around 4. If not to the moon, right? Potentially to the moon. All right? That's the level. That's what we're looking at right there. Something like that. Now we could do, I could do this. So we could do from the high. Come on. That's what the magnet's for. From the high to the low. Right, and get an idea of the gauged out moves here. Right, and then we could take this one. Where the hell is it? Okay, we take this guy. We take that. And then we push up to the high, which we're not going to count that one. We'll count this one. So that was like the move. Well, let's see. High, low, push. Higher, high. Yeah, we'll take that one. Okay. And then we can sort of get an idea of what's going on. We have to add a few things here. So we'll have to make clearly 3, 6, 1, 8. It's not going to cut it. Let's do a 4, 2, 3. Oh, yikes. No. So we'll do an 8, 2, 3. So somewhere between a 4, 2 and an 8, 2. We do like a... Interesting. Oh, wait, I'm sorry. I'm looking at this. I want to be looking at that. So wherever's... Jeez. The 8, 2, 3. It's a little sooner than I want. Maybe 12, 2, 3, 6? Or 12, 7, 8, 6? 7, 3, 2? Yeesh. Well, that's really far away. Damn. All right, well, nothing to see here, guys. Sorry. Would have been nice if something lined up, but say levy. Anyway, yeah, this is maddening that this happens in a market where other coins that are like declared scams do better. It really doesn't make any sense. But let me show you this. Since we're stuck on here before we close out the day. I don't use the high. I don't use the listing ever. Well, very rarely ever. So I would use this as the high, and our low is clearly 1. Okay, so I guess there's not much to do there. So now, all things considered, why does it keep defaulting down there? Oh, because that's 1. I got you. Whatever. All right. All things considered, okay? Given this, given that, given the bounce, and given the rollout, if it doesn't die, the minimum is the 236. Okay? Now the 236 from 0, 236 is at 7. So the 236 is 1,368% move to the high side. Think about that. 1,368% move to the high side. Right? Now think about just recovering 50%. 2,769. Just back to the 50%, which in all technical terms, right? We got a level there. That makes sense. Right? If it wasn't pundy and it was anything else, you'd be like, oh, we're accumulating. Right? When it pops, it's going to go to the 50. Right? If you didn't see the name, right? You'd be looking at that. If not that. Okay? And think about it. 16 Satoshis. That's it. It's about the cheapest guy on the market. Right? So even if you're like, well, I'm not gonna wait for 1 sat, I'll never get filled. Well, fine. So you buy at 2 sats. Still a deal. 200%. See how much 1 sat difference is when you get into the ground floor? How is that possible? 565? Weren't we just at 1,000? What just happened here? 5, 2, 3, 7, 5. Am I going crazy? I swear I'm going crazy. So now it's 589. Did I do something wrong? Low side to the high side. It's 586. Okay. Well, how the hell did we see 1,000 before? Freaking trading view is killing me. So 1,251 back to the 5. to the 236, 589. Yeah, you're right. 589, that ain't worth trading. 589 is garbage. 589. We could do better than that. Anyway, so that's putty. All right. So that'll wrap it up for the night, for the day. Wait, so what did I miss here? Tell the truth, invest long term. My only concern about privacy coins being banned on exchange. Yeah, exactly. Yeah, that's the problem. I don't negotiate with terrorists, but sometimes with drug dealers. Ricky Thompson. Maybe it's in the name, Pundy X. So to sum it up, we're all in on Pundy. No, do not ever, don't ever go all in, period. If you want to like really maximize your degenerateness, then you get a small bag of Pundy. Who knows, right? Or Doge, right? Because Doge at least has cycles. Doge at least or at least you're fairly confident it'll eventually break out, post whatever, a 300% gain, and then drop back down to zero again. I mean, it's just what it does. Bundy doesn't have that kind of history. All right, anyway, that'll wrap it up for the night. I hope everybody has a good rest of the day. Have a good lunch, dinner, breakfast, snack time, whatever you guys got going on. Hopefully it's good. As far as Bitcoin's concerned, rejection at the 50 DEMA, looking to close above the 20 DMA would be very bullish. Failure at the 20 DMA keeps us in a sideways zone, and that would clamp us out between the 50 and the 20. Until then, sort of watch the close, see what happens, and then we'll take a look later tonight and tomorrow. All right? All right, everybody, have a great rest of the day, night, evening, yada, yada, yada. Yes, B. Thomas. See ya, CX, and peace. All right, everybody, have a great one. I want to see you guys on the exchanges. Happy trading.